Hello, today we're going to be looking at how to record income. You'll notice when you first start in business that in the first few months you probably aren't going to get as many clients as you would like to get. At this stage you could probably write up your books every month, although it's actually good practice to write up on a weekly basis. So the first thing you need to do is from your either calendar or your diary, you need to extract all of the information of the people who've actually you've seen in terms of clients, and what we need to do is to translate that into income details which we can then reconcile with our bank account, so we can make sure that we're actually writing up our books and what they call do an audit trail from our calendar or our diary through to the final set of accounts that need to go to people like the tax authorities. On the diary, I would actually say that I have seen people who have used their own diary also as a way of recording income. It can be done, probably not recommended for calendar because it gets a bit complicated and messy and you want to make sure that you're covering it properly. And also to be aware that sometimes if the tax authorities ever do an audit of you, they will want to look back to your original data that includes the your diaries, your calendars, those kind of things. So it's worthwhile holding on to those, although it can be a bit of a pain in terms of finding somewhere to store it all. I've still got stuff from up in my loft from probably about 5 years ago. Anyway, so in terms of income, what we need to do is, from our information that we've actually got, we need to specify what I've done here. As you can see, I've just put your therapy business, income, date, the details, the total amount, whether they've paid by cheque or cash, or more recently people probably will pay by bank transfer, and total to the bank. So on date, let's suppose on the 3rd of March, we had a client called Jay Mortimer who paid £25 and they paid cheque on the 3rd of March as well. We had R. Evans. They paid a total amount of £20 and they paid cash. On the 4th of March, we had somebody called P. Roberts. They paid £35 and they paid cash. And then on the 5th of March, we actually went to the bank. So paid into bank, because we've actually got £80 hanging around, which is not a good idea. So we don't include the figure in total amount because it's not adding to our income, it's just a transfer, so it's the total that goes into the bank that we've paid is £80. And so we can continue through the whole month, and as you'll see here, what I've got is something I prepared earlier in best Blue Pleated tradition. So all I've done is just included all the extra dates, all the extra details, and again, good practice is to make sure you don't have too much hanging around for security risk, obviously. So pay into a bank, I actually really recommend pay it in weekly at an absolute minimum. And obviously if you've got a lot of cash, then pay it in earlier, because what you don't want to do is all that hard work being in essence gone to waste if you get something stolen or you lose it. So we then just take the total amounts, and again, if you remember, I just auto sum, and I've got the formula up here, and it's just taken C16 to C15. And I've just copied that across. So we know that we made income of 193 and we've actually paid into the bank 193. So those are the figures that can be transferred across to our cash book, as they call, which is really what's saying what's in our bank account. Okay, and just a quickie there, and that's it for now. Bye bye.